Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Now in today's video, I'm actually going to give you an overall perspective that I see in the market. And the reason why I want to do that is because if you look at the fear and greed index, currently it's at 27, but just yesterday it was at 16. And last week it was at 18. And this has been a massive drop from just a month ago when it was 74. So obviously the market seems to have turned in terms of the sentiment over the last month. And what I want to do is to actually just take the emotion, take the heat out of the market and to give you what I regard as a level-headed, unemotional insight into what I see with the price movements that's been occurring over the last 6 months or so. Once I've shared those thoughts, I'll do a little bit of the technical analysis, but this time I'm going to actually give you an insight into what a trader would be looking for if he was to make up his mind whether to go long or short in the current market. So what I'm going to do is to look at the high quality factors that a trader would look at before deciding to go long or short in this market. And I think you'll be very pleasantly surprised when I take that particular perspective here. But before I begin, the usual disclaimer, please remember, I'm just sharing you my thoughts, my perspective, and it could be completely and utterly wrong because I don't have a crystal ball. So please remember, everything in this video is for educational purposes only and nothing should be taken as financial advice. I would always urge everyone, like I do every week, to go and do your wider research before making any investment decisions. So with that out of the way, it's Sunday, it's time to put everything aside, sit yourselves down, cup of tea in hand, eyes on the screen, and let's get cracking. So I'm going to start off with the daily time frame here. My view on this market currently, despite all this fall that we've had recently, to me it looks like the bottom is in here. That's the bottom, because what we've got there is a higher low from there and a higher low from there. So what we now have is a series of higher lows on a larger time perspective. And what we've done here is that we've bounced off the higher lows from these positions. If we were to break this 40,000 low here, then for me, this bull market would be in serious trouble. And we have a decision to make. And as I've said many times, if we break the $39,000-$40,000 mark, I would be out of the market. The SP 500, as we can see from here, in the last few days has actually made a recovery, which is obviously positive. The Dow Jones Index as well has made a big recovery from the recent falls, and the dollar has come off its highs and taking a little bit of a pullback here. So again, that's very positive for Bitcoin. The current 38% fall that we've had, as you can see from here, is very similar to the previous cycles before the blow off top. So while it's concerning, for me anyway, as I've mentioned in the last week's video as well, that it's not something to be panicking about. So if we have a look at the 2017 blow off top that we had over here, in the preceding 6 to 9 months, we had a series of falls. If we have a look at the previous 2 falls before the blow off top, this one here was 30%, and the one after that was 24%. And if we go further back, this one here was 40%. So as we can see that before we had the blow off top, it is normal to have 30 to 40% falls along the way. And we had similar falls before the first cycle in 2013. Which I've shown you many times on this channel. Like I said, I don't have a crystal ball and I can only give you my perspective of what I can see. There's certainly higher lows along the way and higher highs in this uptrend that we've had. And it's also very heartening to know that we've made all-time highs from the previous all-time high over here. So we've gone from 65,000 to 69,000. Now some would say that this is a double top, but a double top can only be confirmed when we break these levels down here. Until then, we have to consider this as a bullish development from this all-time high here. Anybody who knows classical charting will tell you that the double top cannot be confirmed until we break these lows that we've got here, which is 28,800. The other observation is that it's quite clear that we've not had a blow-off top, because this is not a blow-off top characteristic that we've had over here. So it looks to me very obviously that the blow off top is not in yet, and therefore I would be expecting a very strong recovery from where we are currently there. So as a result, for me anyway, this is a sensible place to buy the dips. The other main observation I would make just by looking at this chart is that we seem to be building a base just like this here, and now currently over here. It seems to me that we're building a base to make a strong recovery on this side. It seems very similar to what we did in 2019 when we went up to 14,000. So before we got to the 14,000 here, we built a base down here before we had this massive increase during 2019. And then when we fell down here, we built this base around the $10,500 mark before we had this increase over here. And this base that we're building seems to be part of the larger base that we're building over here to go much higher on this side. So what I can see is that it looks increasingly unlikely that we'll have a blow off top in December. And as you know, I was expecting a very big rise in November and December, but that doesn't seem to have materialized. And what we've got instead is a lot of sideways action, which seems to me to be designed to frustrate as many people as possible and to shake the weak hands out of the system before the last rally to blow off. And having read a lot of comments in a lot of YouTube videos, it seems to have actually succeeded in doing so. So the way the markets are moving at the moment with this current fall that we've had is that it looks increasingly likely that the blow off top may not come until the next 3 to 6 months possibly. But we'll obviously keep our eyes on our exit indicators, like our pi cycle, the beam indicator, the 1458 moving average, etc., etc. So we're still in good hands, and as I've shown in the last few weeks, they're not very close to a blow off top. And certainly the fall that we've had recently has made it unlikely that we will have a blow off top anytime soon. I have to say that I took a lot of heart when I looked at the Ethereum. And as you can see, the Ethereum stayed well above the 20 weekly exponential moving average. So while Bitcoin fell below this important exponential moving average, Ethereum stayed well above it. And that's usually a good sign because many times, as we know, Ethereum leads the Bitcoin price action. And if we have a look at Ethereum to Bitcoin, Ethereum is actually making all-time highs against Bitcoin here. And this tells me that the market has a lot more to go forward to the upside direction for both Bitcoin and Ethereum. And as we can see, Ethereum has broken this neckline here and is coming back to retest it as support from this level here. And if we have a look at the junk bond market, which I showed you last week, that it was coming to a level where it was getting concerning because it had broken one of our key levels here. But I said that it's nothing to be too panicky about, simply because this is the level that we need to be panicking if it comes to this level, which is at around about the 83 mark. But as you can see, as I was expecting, we've had a bit of a rally in the junk bond market in the last 2 weeks. So we have actually made a little bit of a recovery, just like the other markets I've just shown you. So that's my overview of the current market. And that's the observation I can make, that despite all the bearish sentiment that's out there, this is what I see currently on the charts. Of course, there are some bearish signs in the market, which I'll go through in the next section. But overall, there's nothing for me to be panicking about on this market as I see it. Let me know what your thoughts are on the current market in terms of your observation by leaving some comments in the comment section below and sharing it with the wider Wisdom Bites community here. So what I want to do now is look at this market from the eyes of a trader and the things that he would be looking for before deciding whether to go long or short in this market, just purely based on what he can see in the charts here. So as you know, with traders, they're always looking for confluence, i.e. a number of indicators giving the same message. For most traders who are swing traders would always go to the weekly chart to get the overall bigger perspective. And here we can see the first high quality characteristic for him to go long in this position. So what we can see here is a very obvious pattern, which I've gone through many times in my previous videos, and that is a bump and run pattern. By just drawing one trend line here, it tells you that this is a very bullish pattern that's been developing now over the last 6 to 7 months. So if we have a look at the definition of a bump and run pattern, we can have a look at the Bulkowski definition, which is basically this here. You can read this yourself. But if you look on this side here, the pattern is this basically, which is what's been playing out with the Bitcoin price action on the weekly chart. So what we have is a lead-in phase here, a bump phase, which is this U shape down here, and then we have a run phase, which is once we break the neckline over here. And if we go a little bit lower, you can see that sometimes what happens is once we've broken the neckline here, we come back and retest this neckline before moving to the higher position. So this looks like a classical bump and run pattern where we have the lead-in phase here, the bump phase, and then we break out over here, and now we have a throwback back to these levels which we've had recently before the move to the upside. And for those of you with a discerning eye can see quite clearly also that we have a cup and handle pattern here, which is again very bullish. And once we break out of the cup and handle, we usually come back and retest that neckline before moving higher. So you've got two very powerful patterns here. And for those with an eagle eye can see a third pattern, which is an inverse head and shoulders. That's your left shoulder, the head, and the right shoulder. And if this was to play out over here, we can see from the bottom here to the neckline, that would be a 96% rally from the point of break over here. A 96% break would give us a price of around about the $94,000 mark. So just by drawing one trend line, we can see there are three patterns, incredibly powerful bullish patterns that have developed over the last 6 to 7 months here. So from a trader's point of view, this would be a high quality characteristic to take a long position. The second characteristic to take a long position here would be that this point here, the 42,000, is actually a key level of support that we've been making. And I've been talking about this for many, many months now since we made these points here, that if you take the 42,000 from here to this point, so it's this point and this point, which I've highlighted many times in my previous videos. And what did the price do? It came and actually found support exactly at that point here. So as a trader, you would be looking for this sign and saying, well, the market has found a very strong level of key level of support here. So that would be your second major characteristic before you would go into a long position. I want to show you the third major reason why a trader would go long at these current levels. And that is by using our Fibonacci retracements, which, as we know, with Bitcoin, has a very high affinity towards the 61.8 level. So if we have a look at the Fibonacci retracement from 28,000 down here, it has found support at exactly the 61.8 level over here. And it's bounced off from there. So once again, a trader would be looking at that and coming to the conclusion that we seem to have bottomed out at this level. Of course, the market can go lower to the 78.6 level here at around the $37,000 mark. However, we know that Bitcoin has a very high affinity to the 61.8, and time again, it finds support and resistance at these 61.8 level figures here. So that would suggest that a trader would be more inclined to take a long position from where we are now. The next major characteristic for a trader would be to have a look at the 50 weekly moving average. So if we have a look historically, that this white line here, the 50 simple moving average on the weekly time frame, we found support from here, and currently we've found support here as well. So that would give a trader confidence to know that we have bottomed out at these levels over here. The next major characteristic a trader would look at would be the candlestick pattern. And as you can see with these long wicks down here, what we see is a very strong reaction to a key support level, which was at 42,000. So at 42,000, Bitcoin was bought out very, very quickly. And as I've shown you many times in the past, if you have a look at these candlesticks here, how many long wicks that we've got. So every time we came to these support levels, the price was bought up very, very quickly by the bulls here. And similarly, this is now happening at a higher level. So having created this strong support, it was bought up very quickly over here and now over here as well. And these are higher lows as we're going forward. For those of you who understand candlestick patterns, the next major characteristic for a trader would be this two candlestick pattern that developed over here, which is the current pattern. And that is that this candle here is what we call an inside bar candle. And if we have a look at the definition of that, we can see that an inside bar candle is a popular reversal or a continuation candle formation that only requires two candles to present itself. This pattern is a direct play on short-term market sentiment looking to enter before the big moves that may take place in the market. So basically how it works is that the candle following this inside bar candle, which is this one here, as long as the highs and lows of the second candle are contained within the highs and lows of the inside bar candle, this usually presents itself as a reversal pattern. Now we won't know it's a reversal here until we break out over here, but certainly the momentum to go further down has been arrested by the fact that the price movement of the second candle is contained within the last candle, this inside bar candle as I'm calling it. So from a trader's perspective, this is a sign that the market that's been falling over here, the momentum to go further lower has been arrested by the fact that this is an inside bar candle formation. This current candle obviously hasn't closed yet. It'll close at UK time tonight at 12 o'clock, and that would confirm this pattern here. So from a trader's point of view, all the major characteristics that I've shown you would make a trader take a long position from the current situation that we're at. And yet the sentiment in the market is very, very bearish, as we've seen with the fear and greed index. And hence that contrarian view that when the market is fearful, we need to be greedy, and vice versa, of course. Now, this doesn't mean that there are only bullish signs in the market. If we have a look at the stochastic RSI on the 2-week time frame, we can see we've made a cross to go down. So it's looking very bearish there. But these are lagging indicators at the end of the day. And if the price should start to move higher, then these would start to move in an opposite direction as well. So I'm not too concerned with this, but we do need to keep our eye on it, of course. The second bearish sign I can see in the market is to do with the RSI. And as we can see, the RSI has started to turn downwards in the last couple of months. Once again, it's a lagging indicator, and should we start moving higher, then this will turn back up again. But certainly this is something we need to keep our eye on as well. So of course there are reasons to be bearish. And finally, I just want to have a look at the hash ribbons. As you know, I do look at the hash ribbons because it's one of the most accurate indicators that we've had in the Bitcoin cycles right from its inception back here in 2009, 2010, and all the way here. And we know that the last blue circle that we got here, the buy circle here, this is providing quite a nice bit of support. The last time we hit this circle was at around about the $43,000, $44,000 mark. As we know historically, once we've hit the buy signal on the hash ribbons, then the price action for Bitcoin doesn't actually close below that level very often. So that gives me a lot of confidence that the last time we looked at that, the price at the last buy signal was over here, and that closed at about 43.5, 44,000. So I'm not expecting the price to fall below these levels and close below these levels. So for me, this provides a very good level of strong support, but only time will tell. So it's only going to be a short video for today. Unfortunately, I've been under the weather. I'm not feeling very, very well. But I hope you found some value in this video. And if you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions, or suggestions, then please leave them in the comments below. So until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.